Hey traders, Dennis Wilburn, the AutoPilot Trader. Welcome to this weekend session, special session of Trade Your Way to Wealth and Financial Freedom. I'm bringing you 3 stocks to take a look at. All 3 of them set up this week and are breaking out. You want to pay attention to these 3 stocks. I'll show you the one that has the best probability of going on for a big run. So, hey, let's jump into today's session right now. Hey traders, Dennis Wilburn, the AutoPilot Trader. Welcome to this special session of Trade Your Way to Wealth and Financial Freedom. This is for the week of the 11th of September. We're finished up the week really strong. A little bit of a surprise for September. As we said in the intro, I've got 3 great stocks we want to review for you. So let's jump into today's session so we can keep it nice, short, and tight. Let's go ahead and jump over to today's session right now. Just a constant reminder that all the materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Stephen and Neil will not be joining us today. This is not a live session. I recorded a special just for you. If you are joining us over on the YouTube channel, please, 1, subscribe, hit the bell, tell your friends. And if you're one of our regular subscribers, because I get this all the time from people who say, hey, we really like your videos and that kind of stuff, do me a tremendous favor. Leave a comment. Even if they say, hey, Dennis, this week's show really sucked. It was gross. Let me know. That's how you communicate. Let's more people know about it. So let's get down into the session today. Okay, here's where we're sitting. We're just continuing up the 40% line. That's my target for every year. 40%. We actually, when you combine everything all together with what we've been doing this year, we actually went over 40% for the so far this year. This measurement here includes both open and closed positions, and as you can see, that was where we were at last weekend, and here we are today. 41%. We're beating the S&P by 56%. I'm really pleased with that, but also to be over 40%. That benchmark, because now do refinements. I think we're going to start definitely doing some additional dynamic compounding through the rest of the year for the AutoPilot members. So what am I looking at for today? Well, let's jump over and look at the S&P and the NASDAQ and the Russell quickly. Let's start with the S&P. Absolutely phenomenal signals here on the S&P. As you see, we came bopping down here. This was Monday, right there. And isn't it quite interesting? Just a whole bunch of stuff came together on Monday. Last Friday, we had that big sell-off that was as a result partly of Powell's comments from up here. We drove it back down. I think this had to do a little bit with the Russian oil issues and this type of thing. Pushed down the prices, but came right down to the support and the dynamic support of this uptrend line and reversed bullish engulfing on Wednesday and then continued to proceed on up. Now that we are back above the 50-day moving average and we have an excellent little gap right there. You can see the gap. Let me grab and show it to you. Right there is a gap. Any pullback into that gap or into the bottom or the middle third of today's candlestick would be a potential entry for a trade in the S&P. Where's the upside target? At least back up to the downtrend line. Although be aware, there's a hidden level of resistance right in there from that gap down. So that's where it could run into some headwinds. And if you get a reversal signal up there, watch for a pullback down. If we break out of that, stand by. We could get our Santa Claus rally a little bit early or end of year early. It doesn't tend to happen because I'm still waiting for September weakness to kick in. But right now, trade the chart that's in front of you. Run it on over to the NASDAQ, as represented by the Qs. Similar type story. As you can see, NASDAQ actually broke down below the downtrend line. So it's coming back up into the 50-day moving average. Has not broached and gone through the 50-day moving average yet. So of the indexes, the S&P is stronger than the NASDAQ simply by its price action around the moving averages. We could stop here, recoup, or if we get a close back above that level, that would be very positive for a push on up into about the 320 level as a maximum amount. And that sounds pretty good. On the weekly chart, no candlestick reversal signal on the weekly. TSI has crossed to the upside. And as you'll see here, we had a 3-line cluster 4 days ago on the market forecast. What's the rule? 1 to 4 trading periods after the cluster, either a 2 or a 3-line cluster, for expected reversal. And sure enough, we got it. Bouncing up. Nice return so far. Russell, as represented by IWM, ran back above the 50-day moving average, the 8-day moving average. We are approaching the downtrend line. So we have resistance up about the 188 level. TSI has crossed to the upside. Market forecast is also looks like it's crossing the upside. If you get a chance this weekend, take a look at the past action of the market forecast when it does get above the 20 line. And what type of patterns the price action tends to put in, and we can be on the lookout for that. I particularly like what we see over here. We zigged up, fell down, zigged back up, fell back down, and then went on its run. We could see something like that in here during the month of September. Right now, IWM, I got to give my tip of the hat to IWM and the S&P for potential upside trade, stronger trade opportunities. So let's see, what else do we want to look at? So the 3 stocks we had in mind today, an oldie but a goodie, but a favorite, Apple. Apple came and basically retraced back to the 50% retracement of this Fibonacci here, of this Fibonacci low high, back, hit it almost to the penny, or dime, if you will. Has basically broken up. TSI has started to move up. Market forecast is trying, after a 2-line cluster, 4 days ago, repeat, it sounds like a broken record, huh? So we bopped up right to the 8-day moving average and stopped. It is early in its move. So where would be my stop? Well, my stop would be down below this swing low right here, about the 152.59 level. For our traders with the AutoPilot Trading option members, we did put in an option trade on Apple as a pre-earnings run. Watch for it to break out back up to the upside. And if it passes through the 8-day moving average up here at about the 161 level, we're probably got a good possibility to get up there about 171 prior to earnings. Earnings coming up when? On the 27th of October. Next, another oldie but a goodie. Amazon. Amazon, I believe, actually has a better looking chart than does Apple. Similar type thing. We are early in the move, folks, and so this is very positive. We may get a similar type of a move as we had over here. Zing, ebbs and flows, and then big move. Excellent situation. We had some good bullish reversal signals here on the daily chart, and we are back above the 8-day moving average. And you can probably hear Kobe, my next door neighbor's dog, want me to come out and say hi to him, and he's going to have to wait. And it also broke through the downtrend line. So very positive on this. What's its potential move? If it gets back up into the upper range, or maybe back up to the 200-day moving average from where it's at, well, that would give us a move of approximately, you need to know what the potential performance there, about 6% or about 8.53%. Let's zip back to Apple real quick. What about for Apple to get all the way back up to the top? Apple needs to break through these, but from where it's currently at, just at the 8-day moving average, that would be a move of about 12% or $19. So those are the type of things to keep in mind. So 19%. Now, drum roll, please. The next stock I think is setting itself up. We've been watching this on and off, and it just flashed a buy signal here this past week, and it is riot. This is a crypto trade, and what I like about this, it basically a strong move to the upside with strong above average volume. It did not pull back into the midsection of the candlestick like we expected to. Instead, it did a gap and go. How do I want to potentially trade this? Well, I can trade it as either a pullback into about the 766 level, or I can just trade back into that 804 Fibonacci. If it fails, well, what do I want to do? If I trade it at 804 and it comes back down into the as you say, the midsection of the open window right here, the gap up, which is a strong level of support, is about 4%. So that's a reasonable risk. I could, since this is a very active stock, I could also be saying, hey, I want to let it give a little bit more breathing room, so I can take a half position but use 10% as my stop loss, or a drop below the 725 level. What's its upside potential if I pick it up about the 804 level? Well, the 804 just back to this level here, 31%. You know, I recognize it's only $2.51, but it's 31%. So of the three, the one with the strongest potential move is, I believe, Riot. One little last trick I want to show you, though, is what happens if it does a Fibonacci extension. So I want to go from the low here to the high here, back to the low. Where is it likely to go? Well, on that, a 100% symmetric move back up to this blue line up here, which is a 200%, would be $17. $17, that equates to a move of, again, just take it from right there up to 17. You see that? 120%, 121% actually. So again, if the crypto is starting to turn around, this is an excellent opportunity, low cost, but a great way to nibble for a potential trade. So that's what I've got on the trades. Let me know what you think about the specific stocks. Also showed you exactly how to go in and dissect a setup to see which one has the largest potential, if it fulfills its technical potential, and to run back to past levels of resistance / support. So just a real quick bounce through the rest of this. Remember, I love to trade the leveraged ETFs, TQQQ, SQQ, and also the 6 other ETFs that we follow with the AutoPilot trading system. If you're interested in finding out about it, do I try to capture all of this? Heck no. But what we do is we try to capture about half of it, and when we can do that, we can compound out, as you see, this compounded out at 113%. Those leveraged ETFs provide that almost on a yearly basis, and we're looking for somewhere, again, 40 to 50% on the ETFs as an add to our capital. So check out AutoPilot Trading. It'll make it well worth your time. If you are a veteran or a BAM member, Bay Area Moneymaker member, you can get a discount trial. And if you want to know about that, you're going to have to send me a DM or a email to say, hey, Dennis, I am a BAM member or I am a veteran. I would like to get a discount. So learn how to engage your autopilot. So with that, I'm going to say aloha. Wish you all the best as we get ready for another great Saturday worth of college football. So remember, 2022, it has basically been based on persistence, patience, and consistency. We have demonstrated that. And so aloha, trade well and prosper. Mahalo. And God bless everybody. God bless you all.